Today, I'll be looking at how Trump's proposed tax changes could impact business owners if they're implemented. As a registered CPA and owner of a tax technology company, TaxElm, I've learned how critical it is to prepare early for potential tax reforms rather than reacting after they are implemented. That's exactly why I'm making this video today, to show you what these proposed tax changes could mean for you and your business and how to prepare for them. So let's get right into it. And to kind of start off this conversation, I want to talk about some things that Tax Cuts and Jobs Act, which was something that Trump put into place the first time in office. I want to talk about some of the things that were in that are set to expire at the end of this year, at the end of 2025. So the first one is individual tax rates. The Tax Cuts and Jobs Act lowered the amount that people are paying on individual tax rates, and that is set to expire at the end of 2025, which would make those go up. That's generally higher taxes for everybody. The standard deduction was nearly doubled back in the TCJA. That is again set to expire. The child tax credit was nearly doubled as part of that act, and that as well is set to expire. State and local income tax. These were like limits that were put in there, part of itemized deductions, but the state and local tax deduction limits were capped at $10,000. Previously, they were uncapped. Now they're capped at $10,000. That cap is set to expire at the end of 2025. Qualified business income. This is that 20% that many small business owners are getting an automatic deduction. You make $100,000, you get a $20,000 free deduction, and you're paying taxes on $80,000 of your small business income. That's the qualified business income deduction, the QBI deduction that was put into place with the Tax Cuts and Jobs Act. That is set to expire at the end of 2025. That act put in a higher estate and gift tax exemptions that nearly doubled those. So where estate tax comes into play, it was nearly doubled the amount of wealth that you had to have upon death. That is set to expire. And then bonus depreciation. This is one that everyone knew, loved, especially for business owners and real estate investors. It was a super powerful way to get depreciation on items all up front. And it started off at 100% and then has been dropping 20% each year. And that is set to be down to zero now after 2025. One other thing, major change was part of that act, was that the corporate tax rate was bumped down to a flat 21%, and that change was actually a permanent change. And so that change will not revert back unless specific law is passed to change that. All of these other things, the individual tax rates, the standard deduction, the child tax credit, the SALT limits, the qualified business income, estate tax and gift tax exemptions, and bonus depreciation, all of those items were what they call temporary changes. And so if nothing is done, those will set to expire at the end of 2025. Now, with that being said, Congress and Trump and everybody are working on a plan to extend a lot of these, maybe introduce some new stuff. But the question really is what are they going to do? How many of these things are they going to extend? How many things are they just going to change? How many things are they just going to let go away to the wayside and revert back to what they were pre-TCJA? And that's a lot of the questions that we don't know yet. We see proposals, we see talks about it, we see Congress, we see the House saying some stuff, we see senators saying other stuff, we see Trump saying other stuff. There's a lot of confusion about what's actually going to happen, and that's what we're going to see play out over the next few weeks and months and find out what exactly might happen with these things that are set to expire, as well as some of these things that we talk about or that Trump has been talking about putting into act, and we're going to talk about that on this video. What I do know is that our national debt is just continuing to grow, and we know that that's been a discussion for a long time. And so I want to just paint a little picture about how this practice really works. When the Congress puts in a reduction in taxes, they got to what they call pay for that. They got to make up for that reduction of lost revenue that the government is losing revenue because they're increasing or decreasing taxes. There's revenue lost there, and they got to make up for that, and they call that pay for it. And so how are they going to pay for that? That could either mean that you're going to have savings, so you're going to cut spending in different areas, and that's how you're going to pay for these tax cuts. That somebody might say reducing these taxes is going to create economic growth, and that in and of itself will pay for it. But that's a lot of things you're going to hear about in the coming weeks and months. You're going to hear about saying like, how are they going to pay for this? Or what are they trading? If we do this, and that costs $50 billion to do that tax cut, how do we replace that $50 billion? And so those are some of the discussions that Congress is going through, because we got to be efficient. We don't want to just continue adding to that national debt, because then we're going in a backward cycle. So time will tell, And there's going to be a lot of different items thrown out there on what is going to happen and how it's going to be done, and what are going to be those pay fors, what are not going to be those pay fors, and what is that process going to look like. So I just wanted to make you clear of how that process works. Everyone can say, let's cut taxes, cut taxes, cut taxes, but cutting taxes typically means that revenue is going down. And so how are we going to get revenue to increase? And there's a lot of organizations, there's a lot of economists out there that will do those studies and say, okay, if we do this, it will reduce in lost revenue. Or sometimes it can be a greater effect, that the increase from reducing taxes will actually create more revenue for us. Tariffs are some ideas to replace some of that revenue, and there's a lot of different discussions out there that we're going to touch on many of those things. Now, since I can only cover this new tax change with Trump in office here in so much detail, I don't want you to walk away from this video and fall into what I call the generalized content trap, where you become so wrapped up in cookie cutter advice on YouTube and other platforms that you never actually take true action on. And this is why I want to offer to you an entirely free demo call, where we'll look at your exact situation and help you come up with a game plan for your taxes. Click the link below to book your demo call. All right, let's get back to the video. So I want to go through some of my thoughts on what I think that Congress is going to be looking at and some of these changes that I think are going to happen that are really going to impact you as business owners. So let's look at the SALT limits. Remember, the SALT is a state and local tax deduction, that you get a deduction on your personal tax return for state and local taxes that you pay. And that used to be unlimited. Now, there was some AMT and various different things, but let's not go down that rabbit hole. That used to be more unlimited. Now they've capped it at $10,000. So that's the biggest deduction. If you had $80,000 in SALT and local income taxes, the max you can take is 10. Now, there's a lot of discussions out there. Will this be raised? Will they let it expire? Will they raise the cap for certain states? That's all to be heard of. I think that we can probably likely see at least this double. So that SALT cap is going to raise to about $20,000. I think that's very reasonable and that's very doable. Now, there's other congressmen, especially in high income states, that say, hey, can we just adjust this for our state? Because folks in Texas, they don't really care because their state and local taxes are pretty minimal. But someone in a high income state, like say New York or California, they get impacted by this a lot more. And so there's proposals from different congressmen and senators about, like, can we raise this for state specific areas? My expectation is that this $10,000 probably likely gets doubled, is close to a $20,000 cap on that. Next, I want to talk about this QBI deduction. Again, that's the 20% deduction that small business owners get. And this is really impactful for small business owners. This has been something that has helped small business owners grow because they're automatically getting this free 20% deduction that's reducing their taxable income by 20%, at least their business taxable income by 20%. And I think this is going to be a really difficult one to just let die. I think that Congress and Trump has explicitly said that he wants to extend this QBI deduction. So I truly expect that this deduction will get extended as part of these talks and as part of this bill that gets put into place. I think it will get extended or slightly adjusted, but I think that this one should be pretty safe because I think you have bipartisan support that think that this is a really good thing, especially for those small business owners. There's caps on it. Those caps might get adjusted. We don't know from that standpoint, but I think some form of this QBI deduction will remain, will get passed through a bill. The next one is bonus depreciation, and that was that tax strategy that a lot of people that were buying equipment, a lot of real estate investors that were doing cost segregation studies and all these different things, they loved this idea of bonus depreciation because it allowed us to take a bigger deduction in year one instead of spreading out that deduction over many years. Now, we still have, and have always had, Section 179 expensing as an option, but the bonus depreciation deduction, that opened that opportunity up for more room, more areas, different types of assets that we could immediately expense in year one on the date of purchase, even if we brought that with a loan. And so this was a super powerful thing. And this bonus depreciation deduction has been going down by 20% each year, which has really kind of changed the way some people invest, the way some decisions that people make from a purchasing aspect. I don't know what's going to happen with bonus depreciation. There's a lot of talks that this bonus depreciation is going to be made permanent at 100%. Maybe it gets extended at 100% for X amount of years. I don't know. I just do know that there's a lot of discussions about this. There is a lot of bipartisan support that's talking about this bonus depreciation. So something I believe will be done here, whether that's back to 100%, whether that's permanent, whether that's, sometimes or for a certain period of time, whether it's a lower percentage, but then made permanent. Those will be part of the talks and determine, okay, what is the net result of making that permanent? bonus depreciation really encourages, to me, helping people grow their business because they get that deduction, equipment that they use to help grow their business. It also is really good for housing because it's a super great incentive for those that are investing in real estate. So I think that this is all plus things that come from that bonus depreciation that I think that something will be done here. But again, we don't necessarily know. This is all just, you hear stuff getting thrown at the wall, and we don't know necessarily what's going to stick yet. But if there's more of this bonus depreciation getting thrown at the wall, we know, okay, that some of it's probably likely to stick. We just don't know exactly how much of it's going to stick. Let's talk about the corporate rate. So the corporate rate, remember, this was a permanent reduction. They reduced the corporate rate to a flat 21%. This is for C corporations. Small business owners, their kind of tax advantage that they got out of TCJA was the QBI deduction. For those that are big businesses, C corporations, they got the 21% tax rate, and that was a permanent change. And so that will obviously, that's not going to expire. That will likely stay the same. Now, Trump has talked a lot about moving that 21% to 15% for those that have that make their products here in the U.S. So I think I do know that Trump is really pushing for those things. Whether Congress gets on board with that or not, we'll come to find out. But I do think that there is going to be some types of whether it's a corporate rate, or whether it's some type of tax strategy that's involved in there. I do think there will be some type of incentive put into a tax bill that encourages made in America products. So I do know that will happen. In what form that happens in, we don't necessarily know, but I do think that'll be something that's high on the ticket. Finally, I want to talk about R&D tax credits. With the Tax Cuts and Jobs Act, they put a damper on this R&D tax credits, which is super important for companies to encourage research and development within their business, which is good for businesses. It's good for America. It keeps us active. It keeps us innovative. But the Tax Cuts and Jobs Act limited this, which instead of being able to deduct R&D expenses in the year they occurred, we had to amortize those costs, which kind of reduced the benefit of these R&D tax credits. This has been something that has been put into bills and bills and bills since the TCJA passed that haven't passed yet. But everybody, bipartisan support, believe that this was just a clerical error, a mistake that was made in that initial act that made you amortize these. So I think that for sure the R&D tax credits will likely make their way into a bill that allows you to deduct R&D expenses in the year that they're incurred instead of having to amortize those costs. I think that will definitely get put into place because it's been trying to be put in place. It just cannot get passed with other things that are put into it. And that brings up another change. When we talk about these tax bills, a lot of times the government will pile all these different things in there. So even though something good might be in the tax bill, it might get voted down because it's got other things that they can't agree on wrapped into it. We're not voting on one item, passing it, voting on one item, passing it. It's a group vote more often than not. And so that's where sometimes you kind of run into these roadblocks. So let's talk about some additional changes. These are kind of campaign promises or campaign things that were talked about. In what do these look like? So Trump has talked about no tax on tips, no tax on Social Security income, no tax on overtime pay, and I think these are all things that Trump is really want to be promoting, really wants to get put into these bills because one, it's something he talked about a lot on the campaign trail. What is the reality of these? I think that when people see these no tax on tips, no tax on overtime pay, no tax on Social Security income, like, well, that sounds great. But I think in reality, what these come out to play with is there's limits. There's going to be caps. There's going to be restrictions to this. So because, there could be some abuse available there. Example, no tax on tips. Well, what stops people from saying like, okay, we're going to charge for this service, but, we highly recommend a 300% tip. So that they're moving regular income into this tip portion to take advantage of that. So my theory on what's going to happen on the no tax on tips is there's going to be a percentage of it. There's going to be a cap or an income limitation or something like that. So it's not like everyone's going to qualify for no tax on tips, or it's not going to be like every tip is going to qualify 100% for this. There's likely going to be some restrictions that if this does get put into play, it's probably not going to be as simplistic as it might seem when you see no tax on tips. Social Security income is another one. It's kind of crazy that this get taxed to begin with because, think of it as a retirement plan. You put money into a retirement plan. If you put it into a pre-tax retirement plan, you get a tax deduction when you go in, but you get tax deduction going in, but you're taxed when you take it out. If you put it into a Roth, you get no tax deduction when you go in a gross tax-free withdrawals. So Social Security income, you don't get that tax deduction when you go in. And so, for it to be taxable on the back end is just kind of crazy. So I definitely think that this has some meat, has some things in it that make sense. In reality, when can they make this happen? How does it happen? That's to be determined. And then same thing with overtime pay. I think this goes along with the tips. Sounds simple, sounds very simplistic, and sounds great for those that work a lot of overtime. But in reality, when this actually plays out in the form of a tax bill, it's likely going to be much more complex than that. There's going to be limits, income items, various different things there. So we don't know if these things are going to pass for sure. We do know that they're being discussed. We do know that it's something that Trump feels very strongly about. Whether that relates to it actually becoming law, we don't know. But just know that, whenever something is touted, a campaign trail or, by a congressman, something like that, oftentimes what is said is just made to simplify it. No tax on tips. But in reality, it definitely says, there could be an option where there is no tax on tips. But the reality of that looks a little bit different than is simply saying all tips are 100% tax free. Likely not going to happen, but some variation of that very possible. So you might be thinking, okay, this is great, but how do I move forward? Mike, you've talked about all these different things. You talked about your opinion, but you don't necessarily know what's going to happen. And I just want to remind you to keep an eye on the discussion talks, but don't put a ton of weight into something until they develop further. So if you just hear a campaign promise or a congressman talk about something, don't just assume, okay, that's going into place, so I'm going to run my business as if that gets into place, because we don't know. And these things get talked about, they get shut down, they get talked about. You see a bill that's ready to be passed, and all of a sudden something happens, they cut something out, or they have to change something, or they can't get it passed for a few votes, and they're changing different things. So I just say that it's good to stay abreast on this information, but don't put too much weight on it until it starts to develop further, and you're starting to actually see the likelihood of this going through very possible. So again, do not assume that if you hear something, it's going to happen. Don't assume that until you see something passed. And then once you see it passed, let's understand what is the interpretation, what is the IRS's interpretation of whatever was passed. And we're going to be continuing to talk about this stuff on our YouTube channel here, on our podcast. So definitely keep following me as we continue. As soon as changes are made, updates are made, bills are put into place, we're going to update you and say, here's where we've changed our scope. Here's what we think things are going to happen. As this is a very fluid discussion and interaction that we want to be careful of, as well as join TaxHelm. TaxHelm is our tax strategist in your back pocket, and we're doing that exactly there for all of our TaxHelm members. We're in the trenches in this, so you don't have to be. We're in the trenches on this, keeping you updated, as well as developing what type of plan and strategies are going to come out of whatever changes might come out of a tax bill. Now that you've seen how these potential tax changes could impact businesses, what concerns me most in my tax practice is how these policy shifts can seriously affect your company's bottom line. Through years of tax planning, I've discovered that adapting to new tax legislation isn't just about compliance. It's about strategic positioning for your maximum tax benefit. So if you want us to analyze your tax plan and help you position your business for these changes, click the first link in the description and book a complimentary demo call with our team. I'll see you on the next one.